Hey everyone, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to follow and leave a 5-star rating. Okay, folks, lots to talk about as it relates to the price of Bitcoin and gold and silver. So right now, Bitcoin is above 83,000. Actually, it's right below 84,000 at the time of recording. It's at $83,963. So as we've been discussing, Bitcoin following that Wyckoff accumulation model where it is double testing and double bottoming that support or that low from November. And it could dip a bit further. It doesn't mean it has to hit the exact bottom that it did in November, but the point is it's in that range and then we bounce. And you may say, well, Tony, how do you know it's going to bounce? Well, if you look at the different metrics and signals, such as the RSI on the daily chart and the weekly chart, they're in the oversold zone. So daily chart is just about at 30 and the weekly chart is showing we are just about to hit 30. So the bottom is near, guys. Again, this is the market playing out in a cyclical pattern. These are these signals that have shown us both the overbought scenario where it's above 70, the RSI, and when it's oversold at 30 or below. So the weekly chart is actually showing something bullish, even though I know some people have been talking about bearish divergence and all kinds of stuff. But when you zoom out even to the other market cycles, such as 2022 and even 2017, but when you zoom out and you look at the different market cycles going back to 2021 as well as 2017, you see where the RSI bottomed out and then a big move came after that. Specifically with 2017, when we bottomed out, the RSI went to this low region of the oversold zone, which we're approaching. We saw a big bounce in 2019, a big rally for Bitcoin, but it didn't lead to all-time highs. Now, when we look at 2022, essentially November, December 2022, when the market bottomed and the RSI again was oversold, that was around the time of the FTX crash. The market rallied from there. Now, that started the bull market, which we've been in, right, since then. But we are approaching that same level. So Bitcoin is at 80 something thousand. It might go down and test 78, 79. And it's at that level. So I absolutely believe a bounce is coming. It's the thesis which we've been discussing. The question is, will it take us to new highs, to a blow off top rally, maybe 140, 150K, or is this simply a straight shot up to 104, 105,000, then roll over to bear market lows? That's where I don't know, guys. I honestly don't. I'm being transparent with you. And if anyone is telling you definitively they know, please ask them for the winning lottery numbers next week. So this is a good sign. Both the daily and the weekly RSIs are near the oversold zone. And we know there's a bounce, right? When the market hits overbought, it goes down. When the market hits oversold, it starts moving up, guys. This is on the charts. Go look at it for other assets. So it appears the Wyckoff accumulation model here is working and the spring is coming soon. So it aligns with the RSI. And as I literally shared with you guys yesterday, that gold was extremely overbought. Even my interview with Brian from Sentiment, which we published on Wednesday, we were talking about the sentiment being in euphoria for gold and silver. And look at what's happening, a massive wipeout of gains. So we have a $5 trillion loss for gold over the past 48 hours. You look at the gold chart, massive red candle. And I said, I've been telling you guys, it was overbought based on the daily RSI, and the chart had a parabolic structure, a parabola curve, right? So clearly, if you know your chart analysis, you can see that. And same thing for silver. So what we were seeing with the data was spot on. Not my opinion, the data. And what we're expecting based on historical patterns is rotation of liquidity from these precious metals assets to the stock market and crypto. Now, is that going to happen overnight? Of course not. So we got to let things play out here over the next few weeks and possibly even months. So patience is still a big key here. But this, if we are looking for signs that things could move for crypto, we're seeing them based on the data, not feelings and emotions, not hype. We were also noticing that the Russell was breaking new all-time highs. So I'm going to keep watching the Russell here as precious metals are cooling down. Will the Russell keep going? And I think it will, because it already showed it has strength by breaking the all-time highs. And that will be a big indication for crypto as well. So lots of things looking good here despite the prices being down. I know a lot of people are focused on the price, and look, rightfully so. I have a portfolio of my crypto assets. I wish they were not at this level. I wish Bitcoin was at 150K, XRP $5 plus, Ethereum $8,000 plus, Solana $500. I wish that was the case because I'll be taking profits, right? So I have skin in the game here, guys, and I'm with you. But when it comes to investing, we have to be patient. We have to look at the data. We have to be educated. We cannot be emotional about the markets. So patience, patience, guys. I know I keep repeating myself, but that's important. The other factor I was highlighting is that the Bitcoin to gold ratio, Bitcoin in the terms of gold, it is bottoming out. So it has been on the decline, guys, over the past year or so, and it's getting ready for a bounce on that support level. Another positive sign. And in addition, the structure on Bitcoin's chart is still showing a higher low. So higher highs and higher lows. If that structure breaks, then yes, it's all invalidated. And we're like, yeah, I mean, we're going to go down to 60K maybe or whatever, right? But I don't think that's going to happen based on the things I'm saying here of RSI. We are near that oversold zone. We're at the threshold. So I believe a move higher is coming. Again, I'm hoping for higher highs, that 150, 140, 150. If not, then we're going to have to keep monitoring the charts and what's happening. Obviously, there's big catalysts out there like the crypto market structure legislation. QE is ramping up. And speaking of QE, President Trump nominates Kevin Warsh as the next Fed chairman. So we talked a bit about this yesterday because the Polymarket Arts showed that he was taking the lead. And look, he is pro crypto. Folks are pulling up his conversations over the years, what he had to say about Bitcoin. So he's not anti crypto, he's pro crypto. And of course, you guys know he's going to do Trump's bidding. He's going to print money like crazy. They're going to accelerate that. We're already in QE. They're going to accelerate QE, and they're going to continue to cut rates. And I think Trump wants to do that ahead of the midterm. So you can imagine as we get further into the year, things are going to start to heat up. Here's what Faryar Shahzad of Coinbase said about the pick. He says, fantastic selection of Kevin Warsh for the Fed chair by the President of the United States. Kevin is the right person at the right time. A perfect blend of market insight, economic skill, and DC experience, all combined with a confident embrace of change, so much so that he can explain Bitcoin and crypto better than almost anyone. And he retweeted an interview with Kevin talking about Bitcoin. Faryar continues saying, having a Fed chair who understands the markets and also embraces crypto is good for the dollar and good for the country. So we got someone who's pro crypto. We got someone's absolutely going to do Trump's bidding. So this is bullish. Now, one item I want to highlight before we move forward is that Bitcoin whales, the on-chain data show they continue to accumulate. So that's a positive sign for this market to continue moving upwards. Again, this is all data, all facts. It's not my emotions. It's not my hopes and dreams. It's not fairy tales. It's simply, what is the market showing us right now? What are the data points screaming to us? And we have to give time for these things to play out. Now, folks, this episode is brought to you by Propy. Propy's leading the charge with putting real estate on chain. I'm a Propy token holder. I have been since 2018. I remember discovering them and I realized that their strategy to disrupt the real estate industry with blockchain was certainly the future. And of course, we're seeing that play out in real time now, right? Where blockchain is being used in the real estate process, real estate's getting tokenized on the blockchain and much more. So Propy is using both blockchain and AI technology to improve the real estate buying and selling process. In fact, you can buy and sell a house on Propy's platform for crypto. So if you want to sell your house for Bitcoin, you can do that. And you can go check out the house listings on their website. So they've been around since 2017. They've facilitated over $5 billion in deals. Legendary investor Tim Draper is an investor in this company, and he still is to this day. He invested in them years and years ago. And they use Coinbase for the crypto escrow service, the buying and selling. They've put deeds on chain. They've created NFTs for properties and much more. And some recent news around around Proppy is that they have announced a $100 million raise to scale their AI-led roll-up of title companies across the US. They said this funding allows us to grow alongside great operators by acquiring and partnering with title and escrow companies, then equipping their teams with modern tools and AI automation. The goal is simple: help teams handle more volume, reduce manual work, and deliver an even better experience for buyers and sellers. So big move here. Of course, they're going to push the AI and blockchain setup to many of these firms and get all these things, titles, deeds, all on chain, guys, right? So really big move by Proppy here. And like I said, I'm a Proppy token holder, have been for years. This is one of my long-term bets. So folks, if you'd like to learn more about Proppy, go to proppy.com. Link will be in the description. Okay, folks, we got lots of news around Binance, some good, some bad. The good, let's start with that. So Binance, they're going to buy $1 billion Bitcoin. So they said here, Binance will convert the SAFU funds, approximately $1 billion stablecoin reserves, into Bitcoin, with the process completing within the next 30 days. The SAFU fund will undergo regular rebalancing based on its market value. Should Bitcoin price movements cause it to fall below $800 million, Binance will replenish it to $1 billion. We believe Bitcoin is the foundational asset of this ecosystem and the premier long-term store of value. Now, this is very bullish that they're going to be buying. However, one could argue this is a bit of a PR move to try to address some of the FUD and some of the concerns, I think genuine concerns that are out there, because CZ actually had to do an AMA today to address people saying that Binance caused all this market crash, the October 10th crash and liquidations. And people have been tracking the on-chain wallets of Binance, and they continue to see liquidations. Now, I don't want to get into all of that because that's a very long, complex type of conversation where it involves market makers. It's not just Binance and much more. And, you know, do I believe Binance is doing everything by the book? I don't think so. But look, I don't have all the details, and I'm only going off of reports I've seen other people say. But, you know, CZ dismissed the claims that Binance caused the October crypto crash, calling them far-fetched. He said the platform was not responsible for the $19 billion liquidation event, and noted that Binance already paid about $600 million to compensate users affected by technical issues. CZ added that Binance is regulated in Abu Dhabi and monitored by US authorities, and that affected customers have been made whole. So they're trying to do a lot of reputation management here because social media has turned against them. And look, some of their competitors are jumping on this trend and adding fuel to the fire. But I think people have been looking at the on-chain data. They see that the point of failure came from Binance and there was a cascading effect. So I don't know what to say about this. It's pretty crazy. We shall see how things play out. But, you know, them buying $1 billion in Bitcoin, you know, that's good. And maybe, you know, the fact that people are going against them helps them to better steer their ship and run it well. We'll see how it all plays out. I'm trying to get CZ on the podcast to talk about all these things, and hopefully he accepts. I remember interviewing him a couple of times back in 2018, 2019. But they are now the world's largest crypto exchange. And look, a lot of volume, a lot of things are happening on there. People are calling it out. And I think Binance, they have to address these things. Now, there's even more drama. So crypto versus the banks. So many of you know the White House is going to hold a crypto and bank meeting on Monday to talk about stablecoin yield, which is a big barrier for the banks to get the crypto market structure bill through. They're lobbying heavily. And we know they don't want to give up the bonuses, the big fat checks they get by keeping the majority of the interest. They give you next to nothing, the breadcrumbs, right? They give you 0.01% and all these things. And people now have the opportunity to go earn more yield with their money on platforms like Coinbase and Uphold and others. But, you know, Jamie Dimon, like I said, you know, just a couple of weeks ago, he's not going to want to give up those big fat checks. So Eleanor Turd got some more details. Apparently, the C-suite of Coinbase and major bank CEOs will not be in attendance. Rather, the discussion will include senior policy executives, so including Coinbase's head of U.S. policy, the crypto trade associations and groups like the Blockchain Association, Digital Chamber, and much more, and the American Bankers Association. So we shall see what comes out of this. The C-suite is not there, and uh, apparently the C-suite, though, they were throwing mud at each other. So apparently reports are coming out that Jamie Dimon and Brian Armstrong of Coinbase clashed at Davos. We know they were both there, a lot of representatives from crypto and the banking industry. So the report coming out is saying that at Davos, JP Morgan's Jamie Dimon told Coinbase CEO Brian Armstrong, "You are full of shit." So after Armstrong accused banks of blocking crypto-friendly legislation. So like I said, Jamie Dimon, I use him as the example because he's king of the hill when it comes to the banks. JP Morgan, the world's largest bank, of course. And, they really, really don't want to give you anything, guys. You know this. And this is why they're trying to block it. It's not about community banks. It's not about, there's other stuff they're saying, oh, stable coins are detrimental to the market. Then why are they all the banks trying to create stable coins, right? Doesn't make sense. But they just don't like that, Coinbase and these platforms are giving you, a fair yield of like 3% or more. These banking C levels and others, they want to keep those big fat checks and give you next to nothing. So I'm glad, Brian Armstrong and others are stepping up and calling the banks out and telling people what's going on. Because you remember, Brian did a great job of exposing the fractionalized systems, highlighting that stablecoin reserves have to be 100% reserve. So there's no fractionalization, there's no lending out of funds there. They have to have it, right? And of course, the Genius Act will make sure they're in compliance. So Jamie doesn't like that, of course, but we know this. He's been against this forever. He wants to control it. We know they're building their own stuff, JPM Coin, Connexus. They're bridging to public blockchains as well. They're offering, Bitcoin trading and much more. They're using Bitcoin as collateral and all those things. So while he was bashing it years ago, the banks were taking a position. And something similar is happening here, right? They're building stablecoins and much more. And speaking of stablecoins, Tether delivers $10 billion plus profits in 2025, $6.3 billion in excess reserves, and a record $141 billion exposure to US Treasury holdings. This is why everyone wants to launch a stablecoin. Tether is a monster. I mean, the amount of money they're making is crazy. And I believe there's a statistic out there where they're one of the most profitable companies out there per employee slash headcount. They don't have a huge team, but they're making so much money. It's incredible. Now, look at this. Hong Kong regulators to submit draft bill for crypto framework in 2026. So across the globe, we got different countries and jurisdictions that are embracing crypto, putting out rules and regulations. They're going to tax it. They're going to take their cut, but they're not banning it. This is the future, right? And remember, who controls Hong Kong? China. I still believe in my prediction that China is using Hong Kong as the testing ground for ETFs and other crypto things, and they will open it up to mainland China eventually. And one of the things they've been worried about is capital flight. Well, if they allow the ETFs that exist in Hong Kong to open up into mainland China, then they can control that capital, right? They can monitor it, and it's all within a regulated wrapper. So I believe China will open up ETF trading, crypto ETF trading to mainland China. It could be this year. It could be a catalyst that sends the market crazy, but we shall see. So Christopher Hughes, Secretary for Financial Services and the Treasury of Hong Kong, said the local finance regulators are planning to submit a draft framework related to digital assets sometime in 2026. In comments prepared for a Friday policy briefing of the Hong Kong Legislative Council Finance Committee, Hughes said the Financial Services and Treasury Bureau and the SEC, the Securities and Futures Commission, plan to submit a draft ordinance related to regulators for providers offering crypto advisory services. He added that the two regulators were consulting the public after releasing a digital asset consultation paper in December. Things are moving very fast across the globe, guys, and wait till you see the crypto market structure get passed here in the United States. I think an acceleration of game theory is going to play out. You're going to see a lot of jurisdictions copy the United States. Usually, United States is one of those big dominoes. So once it falls, everybody follows suit. So things are moving very nicely here. Okay, final news item. Nubank wins conditional U.S. approval to form national bank. So, Nubank has received conditional approval from the OCC to form a national bank, a step that allows the fintech to offer deposits, lending, credit cards, and digital asset custody in the United States. The approval moves Nubank into the bank organization phase, during which it must meet capitalization and supervisory conditions and secure additional approvals from the Federal Deposit Insurance Corporation and the Federal Reserve before launching operations. So Nubank, they do offer crypto services. They entered the market in 2022, partnering with Paxos to let customers buy, sell, and hold cryptocurrencies within their app. And they're looking to expand. And if they can become a bank and operate in the United States, that's very bullish. Again, it's not going to be the entire focus of their business, but they're going to have a crypto sector. And being able to become a regulated bank and do all these things with crypto is the model. We're seeing other companies like Ripple and I remember Anchorage started the whole thing, and others have filed for those charters, right, to become banks. And this is why Jamie Dimon has been so scared. This is why he called up Elizabeth Warren, and they got Gary Gensler, and they started attacking the crypto industry. This is what's going on, guys. But crypto's winning, right? There's a saying: first they ignore you, then they laugh at you, then they fight you, then you win. We are in the then you win phase. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Be sure to subscribe if you haven't as yet. And please support the podcast by subscribing to my free email newsletter. It is 100% free. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. So check it out. All the links will be in the description. Folks, thank you for tuning in. I appreciate you all, and I'll talk to you all later.